Hey there. So, you're gearing up for your life insurance exam? You are in exactly the right spot. Think of this as your high speed, no fluff review session. We are going to cram everything you absolutely need to know into the next few minutes. You ready? Let's do this. Look, we know there's a ton of information out there, so we're going to cut right through all that noise and focus only on the critical policy provisions, options, and riders that you have to know to pass. No wasted time, just the pure essentials. Okay, here's our game plan. First, we'll hit the core agreement. What actually makes a policy a legal contract? Then we'll dive into the rulebook, how you can get to the money, all those optional power-ups called riders, and finally, the fine print, what's not covered. This is your roadmap. Let's get started. First things first, let's talk about the absolute foundation. These are the three clauses that form the legal bedrock of every single life insurance policy. And trust me, you are definitely going to see these on your exam. So, first up is the entire contract clause. The key takeaway here is simple. The contract is only what is written down. That means the policy, the signed application, and any riders. What about some verbal promise an agent made on the golf course? Nope, not part of it. This whole thing protects everyone from any he said, she said arguments down the road. Next, we've got the insuring clause. You can really think of this as the heart of the policy. It's the insurance company's fundamental promise to pay the death benefit. So, if the exam asks you where the insurer makes its core promise, the answer is always the insuring clause. And hey, a contract is a two-way street, right? Well, that brings us to the consideration clause. This is the policy owner's side of the deal. The consideration they bring to the table in exchange for that promise from the insurer, well, it's two things: the info on the application and the payment of that very first premium. And here is a fantastic little trick to remember this for your test. Just picture the applicant saying, "Please consider me for insurance. Here's my application, here's my first premium. Please consider me." It literally links the word to what the applicant has to do. All right, so we've established the contract. Now let's get into the rulebook. These are the key provisions that really govern the owner's rights and how the policy actually operates from day to day. Okay, this is a common point of confusion on the exam: assignment. An absolute assignment is a complete, permanent handoff. Think of it like you sold your car. The new owner gets the keys, the title, everything. It's theirs now. But a collateral assignment is temporary and partial. That's like using your car title to get a loan. You still own the car, but the bank has a temporary claim on it. See the difference? Now for a lightning round of must-knows. Ready? The incontestable clause. After 2 years, the insurer can't fight the policy's validity. Grace period, a little extra time to pay your premium without it lapsing. Reinstatement, how you can bring a lapsed policy back from the dead. And free look, that's your money-back guarantee period. Got it? Good. All right, let's talk about what everyone wants to know about: the money. This section is all about the provisions that let a policy owner tap into that cash value that builds up inside a permanent life insurance policy. So, the most direct way to get cash is a policy loan. And here is a massive exam tip: policy loans are not taxable income. Why? Well, because it's already your money. You're just borrowing it from yourself. Just remember, if you don't pay it back, the loan plus any interest gets subtracted from the final death benefit payout. But what happens if you just stop paying premiums? Well, you don't just forfeit all that cash value you've built up. You get 3 non-forfeiture options. First, you can just take the cash and walk away. That's cash surrender. Second, you can use that cash to buy term insurance for a while with the same death benefit. That's extended term. Or third, you can use it to buy a smaller, permanent policy that's all paid up for life, and that's the reduced paid up option. Now this one's cool. Think of the automatic premium loan as overdraft protection for your life insurance. If you miss a payment, the insurer automatically takes a loan from your cash value to cover the premium so the policy doesn't lapse. It's an amazing safety net. But remember, it is a loan, so you will be charged interest on it. Now, for some participating policies, you might get dividends. Here's the crucial point for the exam. Dividends are considered a return of an overpaid premium, which means they are not taxed. You've got a few options for what to do with them, like taking cash or lowering your next premium, but a really popular one is using them to buy even more insurance. Okay, now for the fun stuff: riders. Think of these like optional upgrades or customizations you can add to your policy. They're like adding features to a car. They tailor it to your specific needs, and you have to know the big ones for the exam. Let's run through the greatest hits. Waiver of premium is a huge one. If you get totally disabled, the insurance company pays your premiums for you. Accidental death, sometimes called double indemnity, pays out extra, often double if you die in an accident. And guaranteed insurability is awesome. It lets you buy more insurance later on, no matter what happens to your health. No new medical exam needed. So we've covered all the cool things a policy does, but it's just as important for the exam to know what it doesn't do. Let's wrap up with the common exclusions you'll find tucked away in that fine print. These are pretty much the big four you need to know. The suicide clause. If it happens within the first 2 years, the insurer just returns the premiums paid. No death benefit. War. Death from an act of war is usually excluded. Aviation. This isn't for flying commercial. It's for high-risk stuff, like being a private or stunt pilot. And finally, hazardous occupations or hobbies. If you die doing something super dangerous that was specifically excluded in your policy, the claim will be denied. And that's our high-speed review. We've hit the core contract, the rules, the money, the power-ups, and the fine print. So to really lock this all in, think about this question. Based on everything we just covered, which of those riders do you think gives someone the most bang for their buck? Really thinking that through is a great way to make sure the stuff sticks. Now go crush that exam.